Welcome to this webinar on extending your in-house bank services in APAC. I'm Marielle Barkley, one of the editors at Eurofinance, which is an Economist Group business. This webinar is part of the Global Treasury Leaders Program, a program that is supported by Deutsche Bank and which has two objectives. One is to connect treasurers around the world, and the second one is to share and spread thought leadership. And we do this through a series of activities that we have around the year. One is 3 summits in different regions. Then there is a webinar series like this one that we're having today. We also have an extensive program of research, which translates into white papers that we share with the community. And talking of the community, the 4th pillar of this program is indeed an online community. A community of treasurers that meet online, like in any social media platform. You can connect, post your questions. So say that you want to know how someone is dealing with a tax problem in a certain country, you put your question there, and there might be someone else in the region that comes back with an answer and experience. But that's also where we host all the contents I've just mentioned. So the white papers, the post-event reports, you'll find the recordings of previous webinars, and it's exclusively for corporates. So I will be posting the link to allow you to join for free, only if you're corporate. As I said, no banks allowed or any other types of providers. I'm sorry for those present here who will not be allowed to connect. But the only thing you need to remember is you'll be asked which groups you want to join. Please click on the Global Treasury Leaders community. That's the only thing you need to remember. Of course, you can join as many groups as you like, but to access the contents I've just mentioned, it's the Global Treasury Leaders community. So with that, let's go back to this webinar, which we want to be as interactive as possible. So please type your questions in the questions tab that you'll find on the right-hand side of your screen, and the speakers will take them when appropriate. But do them from the start. Don't wait until the end because you will forget. So with that, just I'd like to introduce our esteemed chair, David Blair, who is the managing director of ACARET, which is a treasury consulting firm. But he's also a former treasurer and specialized and based in the region. So he's very, very conversant with all the topics we're going to be discussing today. So David, over to you.
Thank you, Marielle. And yeah, welcome to this Global Treasury Leadership webinar on extending in-house bank in Asia Pacific, which is definitely a very timely topic. We have a great panel for you here. 2 very experienced treasurers and 2 very experienced advisors in the form of a banker and a tax advisor from Deloitte, since tax can never be far from within in Treasury. So I'll introduce them. We have Kathy Fields from Hitachi Vantara LLC. She's based in Singapore, one of our treasurers. Another is Goravadi Hungsano, who is from Siemens Regional Finance Center for Asia Pacific, which is based in Hong Kong. So big welcome to Goravadi. We have Michael Velton from Deloitte in Singapore as well, and Imei Nio from Deutsche Bank in Singapore. And you will notice that in the middle of the screen you have a poll. Please complete that poll so that we can see where you in the audience are with your in-house banks. So I'll leave that running for a while. Okay, can we see the poll results? Okay, so we have the largest group are already active with in-house banks. That's good to see. And then implementing 6%, investigating 21%, and the others are obviously just looking for information about in-house banks. So we've got a lot of experience from our two treasurers here and from our two main experts. I think we should be able to answer all your questions. And I'd just like to echo what Mariel said earlier. In the GoToMeeting control panel, which normally appears on the right of your screen, you should see a questions tab there, and please use that, and we'll try to answer your questions either as we're going along or at the end. So we're going to start with our two treasurers first, and I'm going to ask Kathy to share with us the scope of the in-house bank that she's working on in Hitachi Vantara.
Thanks, David. Hopefully, can you hear me okay? I'm hoping.
Yep.
Awesome. Yeah, just to kind of put this in perspective, I'm actually based here in Singapore. I am helping to support a global treasury initiative for our parent company, which is Hitachi Limited, based out of Japan. So the scope for this particular project is huge. It is global. It encompasses all three geographic regions around the world. It involves several different treasury functions as well, because I think, again, when you're looking at scope, you have to look at not only what your structure is that you're trying to implement within the company, but what functions are you thinking of bringing into an in-house cash structure. So for us, ideally, the original scope was to really look at this very globally, have a single in-house cash structure. Right now, it is planned to be based in Singapore, that will support as many group companies as possible globally. And the functions that we're looking at would include internal borrowing and lending. It will include FX, risk management. It will include, from a liquidity perspective, again, attaching it to our liquidity structures globally. It will include some type of concentration for cash as well. So we are also looking at trying to bring POBO into this structure. Just those pieces alone. Oh, and I forgot netting. How could I forget intercompany and netting? So again, the scope is enormous. I think anytime you're looking at an in-house cash structure, and it doesn't really matter, I don't think, the size of your company, because there's so many different complexities. Regardless of the size, you still have to do the work. You still have to evaluate, what is it that I'm trying to accomplish here by putting an in-house bank structure in place. So, but that's just in a nutshell kind of what it is that we're trying to do right now. We had thought about bringing receipts on behalf of into this structure as well. But once we just started evaluating just the basics, as far as looking at our liquidity structure, looking at how we are going to manage all of the intercompany activity and netting and the internal borrowing and lending, POBO is going to be enough. I don't think our ability to bring in receipts on behalf of is going to materialize anytime soon. So that just kind of gives you an idea of what it is that we're looking at right now.
Yeah, humble might be an understatement. That's a big scope. So Vorowadi, Siemens is probably been running in-house banks for about as long as anybody has. Tell us about the scope of your in-house bank activities in Siemens in the region and globally, a bit for context.
Sure, David. Siemens Regional Finance Center in Hong Kong. We cover 15 countries in Asia Pacific, and our team act as like the finance managers for Siemens company in the region. And we start doing that since like decentralized activities since like 2014 from Regional Treasury Center here in Hong Kong. We provide full range of in-house bank and treasury services. Start from in-house bank infrastructure setup, bank account opening, bank document review and contract negotiations, cash pooling setup, centralized payment via our payment factory, which also covered ICC intercompany transactions, support on payment receiving on behalf via our Nostra account in various currency. And we also monitor liquidity status, provide funding, loan deposit to the entity when it is needed. And for FX and commodity risk management, we also provide advisory on the hedging strategy, execute hedging transactions via our own electronic FX trading platform. And we also cover the governance functions as well, meaning that we ensure that fully comply the internal control, that we have internal sanction check, suspicious payment alert, and also other cybersecurity prevention. And for the external, then that we support our country, we also have to ensure that it is fully comply with the country requirement or central bank regulations. Yeah, this is we could support all the in-house bank and treasury services from our team in Hong Kong.
Yeah, okay, you mentioned compliance and governance, so that's definitely going to be something we're going to come back to. That's a very complete list you have there, including contracting and so on. Mm-hmm. So we have here two treasurers who are in different phases in a way. Siemens is probably one of the most experienced in-house bank, and Hitachi Vantara is starting. Is that fair, Kathy?
Oh, that's very fair. Oh, yes.
Yeah. So let's, to set the scene a little bit, let's ask Kathy to set out what do you see as some of the challenges, apart from just the workload, which you alluded to earlier. What do you think are the biggest challenges that you're seeing in this in-house bank project?
For us, I think a lot of the challenges have to stem with some of the things that Virati was talking about with respect to regulations and just understanding the environments that you're going to be dealing with. Again, our intent was to have this global in nature. We're already finding out that there are going to be some countries where this is going to be very difficult. So you have to take that original plan, that original scope, and literally look at it from a country by country perspective and figure out what fits and what doesn't fit. Because you don't want to be wasting your time on efforts or putting energy into a solution for a country where it doesn't make sense. And I could take it even down to a particular company and the business that they're involved with. Like we have some companies, especially in the US, that do business with the federal government. Those companies are going to have to be excluded from this because there are certain privacy issues that we have to be able to comply with from a regulatory perspective. So again, you have to do the homework here. And I think a lesson that I've learned from this particular project is we needed to do more homework up front because we're now, we're trying to do implementation, we're trying to put the solutions in place, and every time we turn a corner, we're finding issues because again, we didn't do enough homework up front. You really need to know, from whether it's related to cross-border cash movement, or particular restrictions on FX, or again, particular issues with respect to tax and withholding tax. How is that going to be implementing the structure that you're putting in place? So there's so many different components that you really have to look at simultaneously when you're trying to put a structure like this in place. One of the questions that has come up recently is, are we biting off more than we can chew? Should we look at a more regional structure as opposed to a global structure? Would that be something that's going to be more manageable for us? So again, there's just, you have to really dig in. The devil here is in the details. It really is. To have a truly effective in-house banking infrastructure, You really have to drill down into the details and know the environments that you're going into. So it's not for the faint of heart. I will say that.
Thanks.
For sure. So.
Varivadi, from your perspective, we already have some questions coming in, so keep those questions coming in from the audience, please. But Varivadi, from your perspective, what do you see as the main challenges in APAC?
Yeah, I would agree with Kathy. In these regions, I would say the regulations is still like one of like the challenge like topics that we always have to work on. And yeah, because we can like separate like the country in the regions into two groups, right? Non-regulated countries and regulated countries. For a Siemens entity in non-regulated countries like Singapore or Hong Kong, Japan, Australia, New Zealand, we can easily provide full range of in-house bank or treasury service without any issue. But for the regulated country, most of ASEAN countries that you will know, like Thailand, Malaysia, Philippines, Vietnam, Indonesia, those countries, you have to understand multiple set of like central bank regulations. And as and when the regulations change, we also have to like, we experience the different interpretations from the different bank as well. And it's really took time for us to clarify what is exactly the requirement from the central bank as and when it changed. So that is like how we have to deal with like the central bank regulation. And from the operating side, we always keep improving our process, right? And for example, we would like to process all our payment via electronic payment, RTGS or ACH, right? But in some countries, we still have to do the check payment. Even like in this like 2021, many countries, some countries still use check because of like tax requirement. And during the pandemic, we also exploring the electronic signatories, but somehow, however, like current regulatory still not really accept like electronic document exchange, and yeah, and then still like most of the case still accept the red ink signatures. Yeah, these are the example of like the challenge that we have to deal with, but however, as Mariam said, we always need to continue working on checking and do our homework, yeah, and to deal with like a different type of the challenge in the region.
So you mean some countries, even after all the COVID stuff we've been through, they're still insisting on wet signatures?
Yeah, we may allow to accept like electronic exchange for the time being, but then like but still like send us later the red ink document or something like that. It is still like we still have to deal with that. But I know it's coming, but it still may take some time for the implementation.
Okay. So we have some questions here that I'll just take now. The first is about opening bank accounts. Where is it easiest to open bank accounts?
I think it depends. I think it depends. What is it you're going to be trying to do with that bank account? So we're going through that.
I think it's which countries they're talking about. Yeah. I guess it's Hong Kong. It's the list that Varivadi gave of open countries, right? Which basically means Hong Kong and Singapore. Imei, do you want to add anything to that?
Well, it depends on who is owning the account, I suppose. So if we are talking about the in-house bank entity itself that is opening the accounts, then yes, the liberal countries that already has mentioned earlier, it will be easier to operate a non-resident account if assuming there is a separate, different legal entity that's operating in those countries. But in countries like the restricted markets, other than those 5-6 countries, then basically non-resident accounts usually has a lot more operational constraints. restrictions. Things like even overdrafts are not allowed, interest rate could potentially not be allowed. So setting up in-house bank entity accounts in those markets may not make much sense. So yeah.
Okay, and the next question was about Kathy's scope, and it does not include robo, as she said earlier. And then Voravadi, I think someone was obviously piqued by what you said about compliance and so on. Have you centralized board resolutions to your in-house bank?
That is on the way. Then we also have because I think it's still quite challenging topic because of the country requirement, especially in Asia Pacific. We still require the board resolutions, and then we also exploring this. But however, we still still need some time to work on this topic. But it's also in our radar, yeah, to improve overall, because for actually bank account opening and the whole life of the bank account maintenance and until you close the bank account is still one of the painful process and really still time consume one. Yeah. So we really focus on this bank account improvement process. And some bank is also work on digital onboarding that we also experience that this is quite good and it's faster when we complete upload all the document required. But the list of the required document is still quite long. But once we complete, then that is move faster in that way.
Okay, great. Okay, there's some questions about locations, which we're going to come to anyway, and recommended banks and aggregator banking portals. I think we'll come to that later. So keep the questions coming in. We'll try to deal with them at the appropriate moment during this discussion. Before we get some further input from our domain experts, I'd like to run the second poll, please. Yeah, so we're asking here, what are the major problems that the audience perceives compared to what Kathy and Voravadi shared earlier? So if you could just select as many of these as you perceive to be important for in-house bank. Okay, it's quite a short poll, so I think we can close it and see the results. Yeah, okay, tax regs is number one. It's pretty important with what Kathy and Voravadi shared before. Regs 93%. Yeah. Asia remains quite a regulated environment. But let's turn over to our domain experts. So Michael, maybe I could ask you to kick off by sharing with us what challenges as an advisor to in-house banks, what challenges you're seeing at Deloitte.
I mean, being a tax advisor, most of the issues I focus with are taxation, but obviously would echo the challenges, particularly around regulatory. And sort of what's been coming through the conversation, I think, kind of sort of starts to define the challenge for tax. It's not that the tax issues can't be identified. Kathy talked about withholding taxes. We've got issues like transfer pricing, fee capitalization. The challenge in Asia is that we've just got so many different countries at different levels of maturity in terms of tax regimes, tax administration, but even down to sort of the very practical procedures to be able to get a lower rate of withholding tax on the payment out to Singapore or wherever. So that it's just that sort of the diversity of the jurisdictions that kind of creates challenges in itself, and each each have different approaches to tax audits and administration. So there's a lot you have to deal with. It's not a single jurisdiction like the US. So to me that drives a lot of the challenge. As I said, the issues are usually kind of straightforward to identify. I guess the thing that's kind of been happening over the past few years, and we'll touch on it also a little bit later, is that you've essentially had a resetting of our international tax rules. And to take transfer pricing as an example, yes, we have to think about transfer pricing when you're pricing loans and pricing fees and other types of services. But over the last few years, all countries now have introduced transfer pricing regimes, including Asia, Thailand, Philippines, others are now all on board. But with that also comes enhanced requirements around preparing transfer pricing documentation, in some cases, filing related party disclosures to the local tax authority. And if you're a large enough group, you've got to prepare what's called a master file and do country by country reporting. And what all of this means is that tax authorities now have much more information around the business, and the activities of the in-house bank. And what then follows from that, and we see this kind of increasingly through the region, is more audits, more reviews, and more transfer pricing adjustments. So in addition to sort of understanding the requirements, sort of getting the pricing right, getting the documentation right, you then have to sort of build up strategies in terms of defense of your transfer pricing, because you have to expect that it will come into focus. And in some cases, in some jurisdictions, even if like a service fee, management fee, that's kind of low-hanging fruit for tax authorities. So it's the development of these requirements, countries picking them up. But I think it's going to, more attention is needed, not less, and you really do need to think about the strategies, around your transfer pricing and defending it, and accepting that there will be audits and there will be challenges. And you're looking to do that across all of these jurisdictions we've talked about, from Australia through to Japan and kind of everywhere in between. But to kind of consistent with this international tax reset, we have seen revisions to or tightening of thin capitalization regimes in different countries. Also, the introduction of anti-abuse rules, anti-tax treaty abuse rules. So you've got rules that now specifically address hybrid instruments and hybrid mismatches. And there's kind of mechanisms now to make sure that if you are claiming a tax treaty benefit from the country, you being in the jurisdiction you are is founded on sort of commercial considerations and not tax considerations. So, as I said, the challenges, two challenges, so much is continuing to happen and to develop. But, dealing with all these jurisdictions, dealing with all these procedural requirements, and sort of managing across the region and managing outcomes with given locations and given tax authorities, I think that's, to me, the key current challenge.
Okay, yeah, that's it's getting more complicated, especially from a tax perspective. And Ime, what do you see from your clients at Deutsche Bank?
Of course, as a bank, we are an enabler for our clients to implement their in-house bank strategies, but we do see that the challenges do vary from company to company, particularly around, I guess, their centralization journey. So if you look at companies that are pretty much centralized to a certain extent, like Siemens, where they have centralized some of their key treasury functions already, whether be it liquidity management or be it risk management, FX. And as a result, to actually enhance it further to the next step, to be, set up the in-house bank entity or in-house bank structures, where it takes care of the whole suite of banking services that will offer to their group companies, be it, account opening, payments collections, reporting, managing all these governance and processes. Then basically the next step of doing it perhaps is, while the challenges are still there, it still exists, but because the work has been the foundation has been done, right? So to a certain extent, to get to the in-house bank structure, it will take some time, but not as much time as opposed to a company perhaps that's still looking at it and they're pretty much decentralized, having all the fragmented, processes and systems. And it will come as a big shock, especially it comes to Asia, where all the regulations are, all over the place, and trying to set up a same consistent process globally or even in the regional form is actually quite challenging. So I guess this task of, like what Kathy mentioned, basically having to do all the groundwork to understand each and every country, each and every single legal entities, what they do and what they perform, would help in terms of providing the necessary advice, particularly around regulations. And as I've already has mentioned, the regulations do change from time to time, and we will need to continuously keep updating our clients so that whatever impact they may have in terms of setting up their in-house bank, whether it is in transition or they have already implemented, how would it affect as well? So that's normally what we would do.
Yeah, it's a good point that the degree of centralization that's already in place within the group is going to impact how fast you can roll out in-house bank. Just be a change in already centralized processes, or it is a centralization exercise, which is clearly going to be much bigger. Thanks, Imei. So already 93% of people said regulations were the biggest challenge. And you yourself mentioned that you categorize countries into basically the free countries, which are not very many in Asia, and the others. So let's just get straight down to the difficult ones. And can you share with us a little bit how it seems you think about centralizing and managing the activities in those types of more regulated countries from Hong Kong?
Oh, actually, we still do the centralized activity for those regulated country, but then we just need to adjust our approach or our the process or the tools to work for those regulated countries, and we also dealing with the regulation challenge from here as well, from Hong Kong, meaning that in case we have some restrictions on the country regulations, right? And our business case may not really, meet the fully requirement of the central bank. For example, in the regulated country, in some of the regulated country, we could not hedge FX exposure longer than 1 year. And our company has signed long-term contract. To solve this issue, then we have to approach the central bank, either via our bank partner or directly. And with the clear, transparent explanation, which is the key of when you deal with the central bank, then you make your business case clear and really transparent. Then at the end, we successfully could receive the central bank approval to hedge long-term project. And another example on the financing is that in general, many regulated countries, the central bank will have quite tight control on the capital outflow. Yeah, in this case, we also managed to get the central bank approval in order for our entity to lend the surplus fund to Siemens AG as the parent company for optimizing liquidity management. Yeah, actually, we try to find a way to deal with this challenge. And then many central banks also open up for listen to the business requirement, right? So and then they also need to help is doing business in the country, in the emerging market countries. And can give one more example on how to handle the country restriction. We also adjust our internal process or in our internal tool to deal with it. For some country, bank would need to review the underlying document before we proceed with FX hedging. We also adjust our tools for the regulated country to have the upload functions for easy reviewing document and pass on to the bank. And also have the functions that support, the special characters rollover, early pickup, and which is quite common for Thailand, Malaysia, and India. Yeah, then for us, we have to keep ourselves exploring the solutions, continuous improve our process, and keep ourselves up to date on the country regulations. That is the way we deal with the challenge for the regulated country.
Okay, so there's very specific techniques that you need to apply to be able to centralize processes, for sure. Kathy, what would you say about dealing, what have you learned so far about dealing with centralizing processes for more regulated countries? Are you just going to skip them, or are you?
Oh no, yeah, very similar to what Varadi was saying. We know the countries where we're going to have to go and present our case to the central bank. As we have gone through this exercise, it has modified our scope a bit. There will be some countries, if the volume is not material enough for us to bring them into scope, those are there may be some countries that will be excluded from scope for sure. But where it makes sense, absolutely, we will have to present our case to the central bank to make sure that we get the proper approvals to do the things that we need to do, whether it's related to FX exposure management, or if it's related to particular levels of capital that have to move cross-border. Anything that we need to support whatever the scope is that we have defined for that particular country, we need to present that to the central bank. And we have already mapped out most of those cases right now and are putting our materials together. In some cases, we are going by ourselves, and in some cases, we're going with a banking partner in that particular country. But again, very similar to everything that Varadi has just shared with everyone. These are the things that you have to go through. You have to do the work. You have to dig into the details, understand exactly what it is you need to do to protect your, if you're really trying to centralize, protect your processes, protect your entities, protect your company, make sure that you can execute, the particular functions that you're trying to implement from a centralized perspective through your in-house bank. So you just have to do the work.
All right.
You really do.
Thanks, Kathy. And Ime, if I can ask you from the perspective of your clients, what do you see them, what do you recommend to them to do in the more regulated countries?
I actually agree with Kathy on the one point, which is prioritization. So in the sense that I do know that there's a lot of restricted markets in the APAC, and really what value are you trying to extract, right? So most of the times, what we've seen is always FX regulations and liquidity regulations, and trying to extract liquidity from some of these markets can be quite challenging. Some is still possible through central bank approval, regulatory approval, but some is pretty much quite restricted other than through the usual repatriation of dividends and profit. So we do see that if most of the MNCs, for example, would have quite a big business exposure, for example, in China and India, and increasingly in some of the Southeast Asian markets like Vietnam, Thailand, Indonesia, and depending on the industries. And so we've seen that they will prioritize which country that they will want to go through the process, extracting the most liquidity value from the country first. So if we look at China, for example, that has been slowly opening up now. The process is pretty clear, especially after a number of years. So all the guidelines, all the regulatory checklists, documentation that's needed is actually pretty clear. There are certain instances or certain markets, they are still going through the process. As a result, maybe the checklist or the documentation can still be a little different company to company, as the central bank is also slowly learning from either from the client themselves or from the banks, and trying to understand what other countries require. Sometimes that's what they ask from the banks as well, like, what do you think this other central bank has been requesting in terms of documentation? So that helps whenever they get insights from clients and also from the banks, so that they have a clearer regulatory requirements that helps companies in the sense that next time another company that does come through and want to go through the whole entire process, it should be technically easier for the new companies.
Yeah, good. So there's possibly progress going on. That's good. Yeah. Actually, one of the questions that we have from the audience, and please keep the questions coming in, but please keep them short, because it's quite a small little window that I'm reading them in. So short and punchy questions, much appreciated. We had a question actually that I think it deserves answering now, which is, why are we doing all this hassle? You know, it's a lot of work, we've heard, and there's a lot of complexity. And why are we doing it? So let's, I don't know, start with Varavadi. I mean, do you ever do a cost-benefit analysis? You've been doing this stuff for years. Are you sure it's worth doing?
Yeah, for sure, for sure. We really do like the cost benefit analysis on like you know the on the the centralized the beauty of the centralized like treasury activities. We would see like our positions like clearly on the like we will improve like the cash liquidity management, because we and then we benefit out of that, and then we could really optimize like the liquidity management and also risk management as well, and then like and also benefit on like the build up the expertise for our people, that we help like the understanding and on the country regulations, and they become expert on like dealing with the challenge in the like many cases that I explained earlier, that we need to keep adjust ourselves and also like our process, and yeah, that would be like the benefit that we get out from that one. And then it's like streamline our process, and then like don't need to look at like so many different like information from the different sources, but then we just centralize, and when we can monitor everything from like our like center here.
Yeah, process consistency and internal control, I think is a big driver for a lot of this work. So what about from your perspective, Kathy? You're probably getting a lot of sleepless nights. How do you
so why are we doing this? Yes. No, but I think taking it just to the simplest form, just the value that you get from centralizing your cash. I'm putting all of your cash in an easy, in a location where you can manage it more effectively. You allow yourself to do cashless activity between the entities. You eliminate a lot of cross-border movement for cash. There's so much efficiency that you can get out of a structure, even if you only get maybe 70 to 80% of your company involvement in this. That's a huge improvement. Just think of it just from the economy of scale perspective. I mean, you have much better leverage with your banking partners because you have a much larger consolidation of cash that you have, to work with. There's so many improvements that you get. Yes, it is a very daunting exercise to go through, but once you do the work and you put the structure in place, it really does, I think, end up paying for itself very quickly in a very short period of time, just because of the amount of efficiency that you have derived from centralizing a lot of activity. Even if it's just a regional structure, huge value to be had.
So there's strong conviction there from our corporate participants that this is a worthwhile exercise. That's reassuring. Actually, Kathy, you mentioned something about leverage with banks, and that was another question from the audience that came up, which is how many banks should you have as banking partners for your in-house banking activity? And
well,
so
our banker friends may not like this, but I would say the least amount possible. So again, the effort is to try to centralize. You want to simplify, and the way to do that is to minimize the number of banking partners that have to work in concert to support your structure. That is a challenge that we're running into, because again, we're taking a very decentralized structure, not only from a tax structure perspective, but from a banking perspective. Our group companies have been allowed a lot of autonomy over the years. So it's going to take time for us to get to that optimized banking partner structure, but it will happen over time, because the group companies will see the value of kind of centralizing their own banking infrastructure over time as they participate in this particular structure that we're putting in place. But that's just my personal opinion. I think the least amount of banks that you can bring into that, the better.
So Varvadi, what's your experience at Siemens? Is it the minimum number of banks, or and maybe you can touch on the question of global banks versus in-country banks? How much do you find you need in-country banks?
Actually, we have like aligned like our bank partner strategy with our headquarters, and actually it's depend on the different activities, right? And for example, FX, then we don't really need the number of like a bank partner like to be that low, right? Because we also want to get like the best pricing, and then we use like electronic trading platform. Then we can have various like participants on like the pricing offer. But for in terms of like the when we want to monitor like the liquidity, then we want to have less number of bank account, right? So then in that angle, then we just like, okay, for the bank partner in the country, we just see what is the right amount to match with like the business volume in the countries, and then like but the things that we do, like we lower like the number of the bank account, and then the transactions of the administration will also reduce in the same proportions, and it's easier for us to monitor the liquidity status. Yeah, we are less number of those bank accounts. Yeah, there's like pro and con. It depends on the business requirement, but then we just like we customize as per the requirement for the countries. Yeah.
Yeah, and of course, in-house bank, it is actually also about reducing the number of bank accounts and doing things through the in-house bank structure rather than having each subsidiary having its own set of banks. So, Ime, from your perspective at your clients, obviously, Deutsche Bank's a global bank. You might be a bit skewed, but I mean, how much, if we just stick to this thing about, do you need local banks, or how much can the global banks do everything? Where do you find your clients falling out? Not maybe where you wish they would fall out, but where do you actually observe them falling out?
So I would say that in general, like if they are looking at centralizing their cash and liquidity management, that's where the global bank will play a much bigger role because of the footprint that a global bank would have versus the local or regional banks. But when it comes to sometimes regulatory requirements that you need to maintain the local bank, for example, perhaps for tax payments purpose, then there's not much of a choice. You will probably still have to maintain a local bank relationship. And then of course you have the FX panel banks, which is slightly different, like what Varvadi has mentioned. You can actually separate that out. But we have also seen the trend where while companies may maintain maybe 2 or 3 global banks, either regionally how they split the business, depending on where the global banks have footprint, but in certain sense, a lot of times people are going through the bank agnostic route as well. So to a certain extent, you want to be able to link up to the different banks. While you have 2 or 3 banks, you want to link to the different banks in a seamless manner so that you don't log on to 4 different systems to just get information. But everything should be consolidated in using technology, of course, to be able to aggregate information across multiple banks as well.
Like Swift or other aggregators.
Yeah.
Yeah. Okay. So we are running out of time, unfortunately, and these questions are very interesting, but we do have some more questions to answer, and especially I'd like to come back to the tax thing. And Michael, you sort of touched on this issue now, the powers that be are working towards a minimum 15% corporate tax rate, which actually doesn't sound that scary. But anyway, I know that there's more complexity behind it. Perhaps you could share what sort of issues this
Since 2017, the OECD has been working on what's known as BEPS 2.0. And a few weeks ago, you probably read in the press that the G7 reached a political agreement to implement a 2-pillar plan. The first is kind of dealing with some issues around the digital economy and how do you tax that and who gets to tax that. The one you just mentioned, David, is the second pillar, or pillar 2, which is the introduction of a global minimum tax of at least 15%. So the G7 endorsed that. on the 1st of July, 131 of the 139 members of what's referred to as the inclusive framework agreed that as well. So now there's a timeline to sort of to work to implement this. The next step being, the G20 meeting on the 9th and 10th of July. But the target implementation date for both of these initiatives is 2023. But to your question, can this be relevant? And I think when we're talking about an in-house bank or finance and treasury center, and you think about Hong Kong and Singapore, both have concessionary rates of tax, 8.25 in Hong Kong, 8 in Singapore. And the effect of this rule will be if Singapore doesn't tax it at least 15%, the parent location can top up that tax. So the response obviously of countries will be, well, I'm not going to sort of give up my tax. So one response you would expect to see is to have a tax at least that sort of minimum rate. So that's so this will start to have an impact, particularly on jurisdictions like Singapore and Hong Kong. Singapore in particular, because you have had such a wide use of tax holidays and tax incentives since we started our development journey back in 1965. Singapore Minister of Finance actually commented on this a few days ago in Parliament. They're going to, they will implement, they will, meet the required standards. But then, then I think the interesting thing, and I think the thing that they will engage with business around a lot is how do we continue to make Singapore, competitive in addition to the advantages that it already has today. So this is very relevant. 2023, as I said, possible response is that we will then have a minimum tax of 15%, so that can't be topped up by the parent location. And just to note, this is applicable to sort of large multinationals, 750 million euro or above. But yeah, so I do think this is really interesting, and the fact that the G7, reached that political agreement, particularly with the US, new administration shifting their position. Lots going to be happening over the coming kind of months and year or so to implement this.
Okay. I suppose the other question, or the related question, is how much in-house bank is actually a tax play, because it's largely a centralization and control play, and the choice of location also that you alluded to there. Basically, if you look at Asia, you've only really got Singapore and Hong Kong. And sorry, I realize you might be. I don't want to offend Michael, but Australia and New Zealand are a bit peripheral from a sort of global banking perspective. So you've basically got Hong Kong and Singapore because Tokyo just doesn't cut it in terms of global cash management and stuff that you need for in-house banking. So the question then I would have for Horovadi and Kathy is, so Kathy's setting up in Singapore, Horovadi's in Hong Kong. How much is your location decision driven by tax?
Oh, a huge part. I mean, the very first thing that we had to take into consideration was when we picked the location, you had to look at tax considerations. We're a financial center. We have a financial center, trading license here in Singapore, which avails us of very favorable, tax structure. I'm very interested to understand what this, flat global tax could potentially have on these types of structures. I think this is something that we need to bring into the conversation today, as we're putting these structures in place to make sure that we understand. But to your point, David, what part of these structures are truly going to be impacted by this global tax? I think that's the conversation that we need to have.
Yeah, let's say Singapore taxes go up to 15%, which they probably will have to. So your tax rate in Singapore doubles. How would you move out of Singapore?
I don't think so, because I think if it's a global tax, you're going to have this same issue pretty much everywhere in the world. But what it does, it opens up a lot of other opportunities. It opens up other conversations, because now Singapore may not be the most favorable place, or other places will be of equal consideration. When you're looking at, you're looking at cutoff times for execution, you're looking at, where do I really want to put my bank accounts? Are there other considerations that I can take into when I'm trying to put the full solution together, I don't have to worry as much about a favorable tax rate if I have the same risk everywhere else that I'm looking at. Does that make sense?
Yeah, so it'd be country tax equally, but I guess we're not getting.
David, just to add one quick point, which I think kind of goes to Kathy's comments. I mean, it can be a bit easy just to focus on the tax rate, the headline tax rate, the 8%, the 8.25%. But given the nature of the activities that are being undertaken, a lot of those flows are subject to withholding tax, and you really do need to think about the tax cost on a total tax cost basis, including foreign tax credits, that can't be credited. So favourable tax treaty network, good benefits, good rates of withholding tax in those treaties, because that's where the greater tax will lie. So you do need to sort of take all that into account, and I think that's where the conversation is in any event, but I think that'll take on a greater importance when you're sort of comparing locations and looking at the overall tax cost.
Absolutely. I mean, withholding tax is something. Yeah, go ahead. Go ahead.
Very quickly, Laura, what about how important is tax? Would you move out of Hong Kong if the tax rate doubles there?
I would say this one is like because it depends on the timing that you set up and then evaluations, right? You also need to factor in this like the factor. Tax is one of them, and then we also consider other factors as well, like legal infrastructure, environment overall, and also like our people profile that we build up along the way, and also like we consider our proximity to our customer as well. And then during the setup time, Hong Kong is more centric to Siemens locations.
Yeah, that's an interesting one where your business operations are centered as well. It's a big factor. Okay, we are running out of time. I'm sorry, people, but it is because of your questions, which we have greatly enjoyed. Thank you. And there was one more about systems. There were lots of other ones, but I'd like to touch on one systems one. We actually haven't even asked our corporates, but I did in the prep call, and they're both using SAP to do this. But that's not the only thing that's available. So I'd like to ask May if you could share a little bit what you see your customers doing. Obviously, Deutsche Bank's a German bank, SAP is a German company. That's probably your majority customer base. But if you can reach into the fringes, and what are the alternatives?
So currently there are quite a number of MNCs too actually using a separate systems, a TMS, separate treasury management system outside of SAP. And of course, within SAP, you would have your treasury module within it as well. So most of the clients, well, it depends on the company itself. So how fast do you want to implement, right? And at times, treasury management system may seem to be a little faster to implement, but of course, it depends on the cost, it depends on the technology, resources you have. And of course, a lot of times within a company is also the decision making, right? Who is actually making the decisions? So treasury management system does have a little bit of more functionalities, perhaps that's catered to a treasurer, but SAP has has actually improved quite a bit, right, in that area. And separately, besides, I guess, TMS versus, treasury modules within ERP, you also have banks actually trying to come up with some solutions that would help clients, at least some components of the in-house bank solutions, for example, virtual accounts, which will help the clients as well. Possibly for companies that are just embarking on in-house bank solutions that may not be investing on some of the technology, within ERP or TMS, or some of the companies that I've seen very rare, but actually build it themselves within the company, which is rare, but there are some companies that actually does it on their own as well.
Some of the tech companies. Yeah, virtual accounts is an interesting one, and I was always wondering when banks would adapt virtual accounts so that they could offer in-house banking in a bank. To their clients. But we are unfortunately out of time, so I'd like to thank the audience for participating, and thank you for your questions, which were very lively, and I'd like to thank our panelists for a great discussion. Thank you all very much. And with that, I'll hand over to Marielle, who's going to close the session.
Thank you very much, David. Thank you for moderating the session, which has been incredibly interesting, and no doubt, judging by the number of questions, it's been really topical. So thank you very much to all the speakers as well for your insights. Thank you, Deutsche Bank, for supporting this event, and thank you all of you for being here. So if you want to continue the conversation, please remember to join our online community. The link to join for free is in the chat. All you need to do is click on that and submit your details. And as I say, it's for corporates only. And in there, you will get information on our upcoming webinars. We've got some, one on FX, one on the ESG agenda in the Treasury department. So lots of interesting topics coming up. Again, thank you very much, all of you, and hopefully see you soon in our next events. Bye-bye.
Thank you.
Thank you.
Thank you.